the next speaker that we have coming to us, and I'm going to introduce him very fast, Steve Primo. Steve is somebody we've also been working with. He works with a company called Specialist Trading. He's developed a lot of and designed a lot of modules that work inside of Metastock. The thing I'll say about Steve is we've had him on the summit many, many times. He does a great job. He's very, very good at explaining technical concepts, very straightforward. Steve, let's go ahead and let you start talking. Hey, Steve.
Hi, can you hear me? I don't know if I'm they're able to see my screen or not.
I'm going to send you those controls right now.
Okay, great. Thanks, Jeff. There we go.
Yeah, I can see your chart immediately. I know we're running about 5 minutes late, but
no
let's not worry about it too much.
No problem. Plenty of time.
You need to go long. Take your time.
Okay, thanks, Jeff, and thanks everyone for attending today, and welcome to this educational presentation of 2 things you can do to immediately, and I stress immediately, improve your trading. Now, there's one thing that I've learned in my 4 decades of trading is that it is the simple things. It is the easy things that are easy to apply and simple to understand that actually work better than the complicated things. One of the first statements my mentors taught to me is when I was struggling was that, Steve, it is the easiest thing in the world to overcomplicate your trading, but it is the most difficult thing in the world to simplify it. And you think about that, anyone, it doesn't matter if you've been trading 20 years or 20 minutes, can overcomplicate their trading by adding too many indicators, looking at too many webinars, too many news events. But it is the traders who have more character that really can simplify things and narrow it down to just a few rules and still be consistent. Now, that's what we try to do at Specialist Trading. We try to make things as simple as possible. And I'm going to show you today 2 simple things, extremely simple but powerful, that I feel can immediately improve your trading. For example, let's take a look at this chart here. This is a chart in Wayfair, and someone looking at this would say, well, Steve, yeah, it's had a nice run up, but it looks like it's just kind of in a holding pattern. And the chat room I go to say that there's actually resistance here. This is where all the institutions are selling. And the guy I watch on TV says the volume is not confirming that. And there's just a lot of negative indications about this. The earnings are supposed to be coming out very soon and they're going to be negative. So I'm going to stay away from this. In fact, I may even look for some shorting opportunities. It may come all the way down, okay? If you notice, all of my justifications were made on outside sources, what someone or something else is telling me what to do. The only thing I wasn't listening to is the chart in front of me. Because with the 2 things I'm going to be teaching you today, you actually would have seen that there was a buy signal generated right here. And had you taken that signal, well, potentially you could have captured 27 points in the next month. So I'm going to be sharing with you exactly how you could have applied these 2 techniques and how they make the cornerstone to one of our most consistent strategies at Specialist Trading as well. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And 9 years ago, I teamed up with Pro Trader Strategies where we had one goal in mind, and that is simply to educate traders. You see, it's our belief that one of the main reasons traders fail is because they overcomplicate their trading and they're not basing their decisions off what the market in front of them is telling them to do. They're basing them off of someone or something else. And so if you learn things that have stood the test of time, it's our belief that that will make you actually a better consistent trader by being in charge of your own trading decisions. So this is what we try to do. We teach students around the world in over 115 countries and in virtually every state in the United States, all the things that I've accumulated in my 41-year career. Now, I started trading on the floor of the Pacific Stock Exchange. That's where my career started. And I was on the floor for a total of 16 years. 9 of those years, I was a specialist. So that's where we get the name Specialist Trading. Now, if you're not familiar with what a specialist does, it doesn't mean that you're any more special than anyone else. It just means that in those days, if you wanted to buy or sell a stock, you had to go up to the trader who specialized in making a market in that. So I made markets in waste management, US Air, IBM, and so I traded during the crash of 1987 and made markets during that and the bull market that followed. I left the floor in the mid-90s to teach to manage money, and as I stated, I teamed up with Pro Trader Strategies 9 years ago to simply educate traders because I've been trading for 41 years now. In my time on the floor, off the floor, for my own account, for other people, I know what works in terms of consistency and I know what doesn't. I've traded just about every system, every technique, and every market environment you can think of. So we're here so that you can shorten your learning curve, so that you don't have to take 41 years trying to get to that level of consistency. So hopefully you can do it in just a matter of months, perhaps even in a matter of weeks. So this promises to be a great educational presentation today. I'm going to share these two easy and simple to follow techniques. But before we begin, as always, please take a moment to view our disclaimer. We're required by law to show you this first. I'm going to share with you a lot of performance results using these two edges, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time, if you haven't done so already, to follow us on Twitter. You may want to copy our handle right there. It's an abbreviation for Specialist Trading. Every day I post new and different information to educate you, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. So there's a lot of great free information, free educational information to follow us on Twitter. So feel free to copy down our handle right there and to follow us on a daily basis on Twitter. Okay, with that said, as I stated in the opening statements, we're a little bit different from other companies or other presenters you may have seen in the fact that our only goal is simply to teach you. As you see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect market is or the perfect time frame. My goal is not to tell you, how you should be trading and that only systematize your trading. We don't believe in that. In fact, we're not a systematic company. We feel different from systems in that we feel that no two traders should ever trade alike. That's why we don't keep statistics, because we give you all of the different components, the pieces of the puzzle, and it's up to you to decide how you want to enter, how you want to exit. If you'd like to take a quick exit, would you like to stay in longer or even longer than that? Would you like to take a very conservative stop placement, or would you like to have a lot more risk? Would you like to track the trade, or would you like to just get out simply at the first exit point? See, there are so many different variables to trading, and there's no way to systematize or keep records because we don't believe in that. We feel everyone should make their own decisions. This is how you become a consistent trader, not by following someone or something else and have them tell you what to do. This goes against our philosophy. So as you see here, my goal is to teach you how to trade with the Specialist Edge. This is the same edge that was taught to me some 4 decades ago, and what I really believe has been able to sustain me now, going on 41 years of my own personal trading. Okay, so since this is going to be conducted like a classroom, I do want to take your questions. I know we have a good group here today, over close to 400, I believe, but the point I want to make is that if we stop for every slide, we may be here a good 2 hours. And I know I have a limited time. I don't want to take everyone's time up. There are some great presenters coming after me. So what I'd like to do is just wait till the very end of the presentation. So if you have a question, please wait till the end. I promise I'll try and get to each and every one of your questions, okay? And remember, this is being recorded, so if you miss something, I'm sure they will send you a link to this recording. Okay, why don't we begin? Now remember, I stated that everything we teach, everything we trade, and I personally trade, is rooted in simplicity. Remember, simplicity is what will make you consistent. Not complex, not overcomplicated methods, but simple methods. Those are the most powerful. This is what I've learned in 41 years. So let's go on to these two edges. Edge number one, if you have a buy signal, I don't care what it's based on. I don't care if it's based on fundamental news. I don't care if it's based on candlesticks. I don't care if it's based on the full moon. It makes no difference, but it can only be entered above the 50 period moving average, okay? So let me show you what I mean here in this example. As we look at this chart, someone would look at this and say, well, Steve, I've been taught that the class I took says that there's no real range here. We're kind of going down, then up, then down. We're basically in a sideways market. And so what my teachers have taught me to do is that there's no trend here and I should stay out of the market, okay? Once again, this is the way 99.9% of traders trade. But the first thing we teach our students at Specialist Trading is to always apply the 50 period moving average. And then once you do, you ask yourself, where is price in relation to that 50 period moving average? Well, if price is above the way it is here right now, well then what's the market telling you? Not some guy in a chat room, not some trading guru on TV, but what is the market, the source of what you're trading? What is that telling you? It's telling you that the overall trend is up. So we never want to swim upstream. We never want to buck the trend. So if the overall trend is up, that means we are only going to be having a buyer's bias. We will only be looking for buy signals. It's that simple. We've already eliminated half of the decision-making process. We keep it simple. Now, if we turn the coin upside down, it's the same process on the sell side. If you get a sell signal, regardless of what strategy you're looking at, I don't care what it's based off of, it can only be entered below the 50-period moving average. So once again, we look at this generic chart here. Most people would say, Steve, there's no rhyme or reason to this. We're just basically in a holding pattern. I can't tell what to do. That's not true. Add the 50-period moving average. Then you ask yourself, where is price in relation to that 50? If price is below, you're only going to be having a seller's bias. If someone tells you to buy this, I would most likely run because the odds are against you, it's going to work. Most likely, you'll maybe make a little bit and then you'll have to be very quick and get out. And over time, if you hold on, you'll probably lose money. So the overall trend is down. That's what the market's telling you. It's so simple. And you can do this right now. Go to your Metastock charts, just apply a 50-period moving average to find out what the overall trend is. Not the short term, but the overall trend. Okay? Let's go to edge number 2. Now that we know the overall trend, is that a means for us to enter? Is that a strategy? No. It doesn't mean that if price is above, we just buy at the market. There's no rhyme or reason to that. There's no structure. We have to add structure, a little organization to our method. And we do that by looking at the signal bars. This is more of a short-term trading technique. So let's say your strategy is above the 50-period moving average, okay? Well, you want to wait for a setup bar, a signal bar that closes in the top 25% of its range, okay? So let me show you what that means here. Let's say you're looking to go long, price is above the 50-period moving average, and rather than just buying at the market, they're just jumping in feet first, wait for a bar that closes in the top 25%. Simply divide the bar by 4 separate but equal portions, and if you close in that top 25%, what is the market telling you on the short term now? Okay, we know what the market's telling you on the overall trend, but what's the short term trend telling you? It's telling you that it wants to go higher very soon. All right, so now you have the overall and the short term trend. There's no need to look at 2 different time frames. You can if you want to. We're not here to tell you how to trade. We're just sharing with you these golden nuggets to help you make your trade simpler. So you can look at a higher time frame to confirm, but all you really have to do is look at the overall trend where price is above or below the 50, and then look for this bar that closes in the top 25% of its range. So let's say that you have a strategy that's based off, let's say news, okay? And news comes out and you think, boy, this is good. And this Steve Primo guy, I listened to him and the price bars are above the 50, so I guess I can just buy, right? No, you should wait for a bar to close in the top 25% because that's the market telling you on the short term it wants to go higher. So all you have to do is just jump on board. Let me show an example of this generic chart we looked at before. Well, we have 2 instances of bars closing in the top 25%. Right off the bat, we went up a little bit higher. This one worked a little bit better. But both instances, after you saw that, the market obviously wanted to go higher. So it was giving you a tremendous clue. Same thing works to the downside, all right? Sell signal bars must close in the bottom 25% of their range. So if you have a sell signal, don't simply buy it, I mean, should say buy a put or short the market, whenever you want. Wait for the bar, whenever all the rules come into play, wait for the bar to close in the bottom portion of its range. So if you're below the 50-period moving average and you see a bar like this closing in the bottom 25% of its range, that's the market telling you on a short-term basis it wants to go lower. So now you have the overall and the short-term in sync with each other simply by looking at the same chart. There's no reason to overcomplicate your trading. Once again, we looked at that generic chart I shared with you before. Now we have a bar here that closes in the bottom 25%. What was the market telling us? It was telling us it wanted to go lower. Now I know most people would look at that and say, boy, Steve, this is a double bottom. This is, you got to buy here and look at it. It's already started to go up. And this is what a lot of my new students will always say. They say, Steve, it started to go up. And I said, if price is below, the overall odds are that eventually it's going to go lower. So why waste your time trying to make just a little bit here and there? Why not be in sync with the short term and the overall trend? So let's review the 2 edges before we move on. The 2 important edges that you can add to immediately improve your trading are edge number 1, apply the 50-period moving average. I know a lot of you may be saying, Steve, I don't trade daily bars of stocks, I trade 5-minute bars. Or Steve, I don't even trade stocks, I trade futures, or I trade currency pairs, or I trade Bitcoin. It makes no difference. whatever chart you're trading, whatever market you're trading, add a 50-period moving average, okay? And someone said, well, Steve, do I have to make sure that the weekly moving average is in sync with the daily? No, it's not required. If you want to, you can. If you want to, look at 2 different time frames. But in my 41 years of trading, I found no consistency in that. So it's up to you. Remember, we're not here to tell you what not to do. We're only here to give you information that I have found has high levels of consistency. So always apply a 50-period moving average to tell you what side of the market to be on. And automatically you'll eliminate half the questions of, how many times have you gotten into a trade and you say, boy, why did I buy this? This thing is not going up. Most likely it's because it's below the 50. In fact, go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason why you had losses were because you were buying below the 50 and selling above. Okay, you're swimming upstream, which is, I would venture to say 99% of all traders trade that way, myself included when I first started. But there's no consistency in that. And then to add some structure, because applying the 50 does not tell you when to buy, does not tell you when to sell. It just tells you what bias you should have. Now we have to add structure in the form of our top bottom 25% bars. Okay, so regardless of what your strategy is based off of, if it's a buy setup, don't just simply buy at the market. Wait for a bar to close in the top 25%, because that's a great clue. That's a tremendous clue coming from the source, coming from what you're trading, telling you, okay, I want to go higher. All right, imagine a train leaving the train station, okay, and it's starting to head off in your direction. That's the train you want to buy, okay? If you're going from point A to point B and you see a train moving in the direction of point B, you want to jump on that train. Unfortunately, most traders do the opposite. They see a train coming down the tracks in the exact opposite direction, and that's the one they jump on, okay? And then they wonder why they're losing. So you want to get a clue that you're going in the right direction, and the top bottom 25% bars will show you that, okay? Now, here's the beauty of these 2 edges. You can either add these 2 edges to your current trading method. I firmly believe that if you started applying this to whatever method you trade, okay, you would increase your odds for consistency tremendously just by adding these 2 simple things that you can do right now. It doesn't cost anything. You can all do it on your platforms. It makes no difference. You can start doing this right now. Here's another advantage of these 2 edges. You can actually build a strategy based off of them, because these are tremendous components to have in the requirement list of your method. So whatever you want to base it off of, you can still apply these 2 to a new strategy. I know a lot of traders like to build their own strategies. These will increase your odds as well. In fact, some 41 years ago, when I was struggling as a trader on the floor, my mentors, who were specialists themselves, presented me with these 2 edges in the form of a strategy that I've been trading in some capacity for the past 40 years, and that is strategy number 4. So strategy number 4 is probably one of our most consistent as well as popular strategies we have at Specialist Trading and Pro Trader Strategies, because it has these 2 components included in them. In fact, they are the cornerstone of this strategy. Let me tell you about some of the highlights of this particular method. It's for virtually all traders, from beginners to advanced. So it makes no difference if you're a hedge fund manager, and we have some hedge fund managers that are our members, or if you've been trading for the very first time and just started trading last week. It makes no difference. Every one of our students gets the same format, the same basic format, and then we work out from there. Remember, we do not, in fact, we encourage traders to trade differently. So we don't have statistics, because that would mean that everyone trades the same way. We don't believe that. We give you a basic format, a benchmark, and then we work out from there. If you want to be a conservative trader, if you want to trade options, if you want to trade swing trading, if you want to trade tick charts, and then we work with you from there based off this basic format shell, okay? So it makes no difference your experience level. Now, it was originally designed for traders looking to catch quick momentum moves. When I first applied this to my own trading, I was on the floor of the stock exchange, and I was getting in and out using this maybe sometimes 30 seconds or a minute, okay? But we've devised ways to stay in the trade much longer, days, weeks, even months if you'd like, all right? Now, its intensity level. If 1 was the most intense of all strategies, where you basically could never leave your computer desk. You had to stare at your screen all day to make sure you were in line with the strategy. And if 3 was the most relaxed, where you could simply enter orders and walk away, it's a very moderate number 2 level, okay? Why? Because it only uses 1 indicator. You already know what that is. That's the 50-period moving average. The reason why it's a very moderate strategy, it's based on pattern recognition, all right? This is a pattern we teach you in the course. that comes along with those two other rules. So the basic gist of this is based on a pattern that we teach you what to look for, okay? The beauty of strategy 4, once again, is its ability to transfer onto any time frame, any direction, and any market. So once again, don't worry if you only trade currency pairs. Don't worry if you only trade monthly bars of stocks. Don't worry if you only trade commodities. It works great on all those markets in all time frames and in all directions. All right. Now, if you're a student or a member of our course, you receive the automatic add-on, the buy and sell arrows telling you when the setup bars are. You can decide when to get in based off our different variables for entry, when to exit based off on different variables for exiting points, and where to place your stop based on our different variables for stop placement. So that's why we say no two traders should ever trade alike. You use the same format, but you pick and choose what feels comfortable to you. All right. Now, our edge at specialist trading with all of our methods is consistency. That's what we're trying to promote and instill in all of our students. We're not promising the world. We're not telling you that every trade is going to be a winner. In fact, I'm going to show you a couple examples where there are some losing trades applying strategy number 4. But the beauty in this method is its consistency. In other words, our methods have a 2-step forward, 1-step back approach. All right. We want to have methods that even when you do have losses, which are inevitable, everyone should have a loss every now and then. There's nothing wrong with that. What's wrong is when you don't have a method that's able to recoup those losses. So you want to have a method that sooner than later, hopefully, is able to recoup them. So you have a 2-step forward, 1-step back approach. And strategy 4 has a very high level of consistency. Okay, so those are the highlights of this particular method that incorporate those 2 edges, which I just taught you and shared with you this morning. Let's look at some recent strategy number 4 examples on the Metastock platform and just show you how simple it is. Now, I'm sorry, I know a lot of you are going to say, well, Steve, where would you have entered? Where would you exit here? Where did you place your stop? Remember, I can't divulge all that information because it's all those are in the course. But what I can share with you are those 2 edges, which I taught today, and you'll be able to see them in every one of the setups that was generated, okay? All right, so let's start by looking at this. And once again, you're going to see how simple it is to be a consistent trader. You do not have to overcomplicate your trading. As we look at this example in VLO, okay, Valero Energy, okay, originally price was above the 50-period moving average. We had 3 closes below, as you see here, but then we closed above, and we closed in the top 25% of its range. Now, that's not enough to buy this, but a buy signal was generated because all the other rules and requirements of the method were generated, and you had the potential to capture 8 points in the next 5 days. However you wanted to do that, with options, actually buying the stock, selling the puts, it's entirely up to you. Remember, you're in charge. I said in the very opening statement, our goal is to teach you, not to trade for you. You're in charge of your own trading, not us. We simply teach you and show you the way to be a consistent trader. Here's another example. Now, originally in THC, Tenet Healthcare, we were above the 50. Then look what happened here, all right? Now we have consecutive closes below. So what is the market telling us? Is it telling us, boy, this is a great buy. All the institutions are buying here and we've hit some major support. No, the market is not telling us that. That's what some outside source is surmising and coming up with their discretionary view. What the market is telling us is the overall trend is down because we are below. And so if the current is going one direction, do we want to swim upstream? No, this is the way most of us are taught to trade. You never want to swim upstream against the overall trend. You want to swim with the current at your back. Okay, so now that you know you should only be a seller, now you start looking for those bars that close in the bottom 25% of their range and meet all of the other requirements of the strategy. And guess what? We had a total of 3 here. You could have potentially captured 5 points to the downside coming into the mid-September period. Another example here in AMD, all right? This is a great example of how most traders look at the market. Once again, someone looking at this would say, well, Steve, it's the middle of August, middle of summer, nothing is happening. There's no real trend in anything. First, a perfect example, AMD, Advanced Micro Device, we're basically going sideways. There's no direction. How can I tell there's a direction here or a trend by looking at this last 2 or 3 weeks? We're just going sideways. All right, the chat room I go to says that you shouldn't touch this with a 10-foot pole because you'll get whipsawed and most likely it's probably going down. When you see sustained markets going sideways, usually they're just making a top or some type of topping formation before they head lower, okay? Once again, this is the way most traders trade, listening to someone who's supposed to know everything. Why don't we just listen to the chart? What is the chart telling us, okay? I think you can answer that yourself, right? All you have to do is apply a 50-period moving average. Where is price in relationship to that? Price is above. So what is the market telling you? It's telling you that the overall trend is up. Now, does this give you license just to simply buy at the market? No, you need structure. But we automatically eliminated all of this noise about, well, the institutions are selling here. Oh, the earnings are going to be bad. Oh, you know, I don't like what's going on economically in the world. Eliminate that noise, that overcomplicated way of thinking, and just simplify your trading. Remember, it's the easiest thing in the world to overcomplicate your trading, but it's the most profound thing to do, the most difficult thing to do, to simplify it. But once you do, you're in for the ride of your life, because then you see how easy it is to become consistent. So as we see here, the market's telling us it wants to go higher in the overall trend. Now we look for those bars that close in the top 25% and that meet all the other rules, the other 3 rules of the strategy. And we had 2 buy signals right here towards the end of August. And we've all seen what AMD has done in the past month or so. And you have potentially 15 points you could have captured, all right? This is the way traders look back. They'll go, boy, I mean, there was no sign that this thing was going to take off like this. I missed the boat. That's not true. There was a huge sign that the market wanted to go higher. You just had to add some structure. All right, once again, we're looking at the market with the overall downtrend in EA, electronic art. As we see here, we have a sell signal generated. We're not looking to buy anything. Most traders would say, well, Steve, this is a major bottom. We've got a double bottom. This is major support. The volume is confirming it, so I got to buy this, right? It's probably going to go back and fill this gap right here. Just listen to the market. What's the market telling you? It's below the 50. It wants to go lower. The short term wants to go lower. We have a bar here that closes in the bottom 25%, meets the pattern rule of the strategy, and the stock drops 17 points in 9 days. Now, the funny thing about this is that most people would say, oh, well, you probably were following some fundamental news or economic news. You guessed the right side, and that's why you had this big gap down here in EA, and that's where you're able to take advantage of this. Absolutely not. We don't tell our students that they can't, but it's not required to look at any fundamental news. I stopped looking at fundamental news 40 years ago. I don't look at fundamental news at all. I have no idea what earnings are for any company I trade. I have no idea what's going on economically. I don't care about jobless claims. I just care about what the market's telling me. Now, if you do care about that, that's fine. I wouldn't tell you not to, but there's no reason to look at that. I mean, I'm still here after 41 years without ever looking at that stuff. So why should you have to? Okay? So as we see here, we had no idea there was a news event going to happen and 2 days later. All we knew is that the market, not some guy in a chat room, not some guy on TV, but the market was telling us it wanted to go lower. That's the only information we had. All right, now we see here, we have a little bit, this is a little bit more of a complicated trade because we're above the 50, we have 2 closes below, but then close back above, okay? This is what you would call a little bit more of an advanced trade because it just barely closed above. Now, it's a little bit more advanced, but it's still a valid setup to go long. And as you can see here, PlayStation went up 15 points in 2 months, okay? Now, if you missed that, if you didn't want to take this advanced trade, well, guess what? The day before it gapped up here, generated a buy signal. This was just a few weeks ago in September. Another trade to the downside, this is Facebook. We all remember that Facebook was just taking off tremendously. Terrible news came out about it. It dropped like crazy, and now it's been sustained below the 50-period moving average. As we were above the 50 moving average, we had a buyer's bias, and we had a nice buy signal right here that you potentially could have captured 20 points. I know a lot of students will say, well, Steve, yeah, but if I had held on to that, I would have lost a lot of money. Sure, okay, we're not going to tell you that every trade's a winner, but guess what? You had 20 potential profitable points to work with, all right? I would have suggested to take some type of profit or at least to take some off the table with that. And one of our exit points, which once again we share with you in the course, actually would have had you exiting the entire position right here on this day. I can't give out what that information is based off, but that's in our course and you'd be able to see that as well. Now, once we were below the 50, we change our bias. Now, so no longer are we looking at any type of bottom fishing in Facebook. Now, I know a lot of traders will say, gosh, this is really low here. Look at the nice bounce. It's sure, you're going to get some nice bounces that you can make some quick money off of, but you've got to be very quick and very diligent in your trading. It's a lot simpler and you're going to sleep a lot better at night if you simply be in sync with the overall trend, which in this case now has changed to down. So now we apply the same rules to strategy 4 to the downside and look at the nice sell signals. Wouldn't this have been a lot better to trade in sync with the overall trend than to try and pick a little point to bounce and to be a bottom fisher. Let's look at this, I should say, this setup in VRSN. Now, once again, price is above the 50, and look at the nice run-up we've had in this stock, okay, starting from July all the way coming into the end of September, okay? What traders love to do is they say, gosh, boy, I really missed this thing. How did I know it was going to go up this high? Well, no one knows how high something will go up. We don't predict or have any predicting tools at all. We just simply give you tools to apply and use in your trading, but nothing we have ever predicts a high or a low. We're simply jumping on board with whatever the market wants to do. But because we were above the 50 well in advance of this nice run up, we could have generated 1, 2, 3, 4, 5 signals. Now here's where we talk about consistency. Every one of these signals would have been profitable except for this one. You would have had to have been very quick and exiting this before it fell out of bed. But this is what we mean by consistency. As I said earlier, I'm not going to sit here and tell you that every trade's a winner. Most likely, had you entered into this trade, you would have been thinking, boy, I'm going to make a lot of money. You walk away for a bit, and now we're closing lower, and now you've got a loss on your hands, okay? If you use proper money management, which we teach you in the course, and apply the stops, which we teach you, sure, you would have had a minimal loss. But had you stuck with the platform that we're teaching you in the format, guess what? You would have been able to recoup that loss rather quickly and gotten back on board to the road to consistency. So this is what we mean by 2 steps forward, 1 step back. There will be losses from time to time. That's okay. What you want to have is a method that's able to recoup those losses. As we look here in PXD, we see here that price is oscillating above and below the 50. This is another advanced trade because it just closed below the bar, but it meets all the requirements and 25 points to the downside coming into September. If you missed that trade though, if you don't want to take an aggressive one, well, you had 2 more chances to take a trade here, perhaps catch 10 or 15 points. All right, now here's what we call a cluster in OKTA. Now this is what we call a cluster because many times you'll get 2, sometimes 3 setup bars, the way we see here, that are all in line. We're above the 50. They close in the top 25%. They meet all the rules, but nothing has happened yet. Now, even though it's not guaranteed, remember, nothing is guaranteed in trading, but even though this is not guaranteed, this is a high probability setup that the market is coiling, getting ready to explode sometimes. We have found this in the past. Is it certain? No, nothing is certain, but this is something to watch because as you see here, we had 3 buy signals generated in August with nothing happening until finally it kicked in and we had a 20-point gain in just 1 month. So you potentially could have captured 20 points either by buying options, by buying the actual stock. Remember, it's up to you. You're in charge of your trading, not us. And if you miss that cluster right there, guess what? The market gave you even 1 more chance to get long the first week in September before some news came out, which we have no idea what it concerned. Still don't. What does it matter? I mean, you've got a nice profit. Who cares what the news was? As we look at Win Resorts here, we see here that we are below the 50-period moving average. So why should we try to bottom fish? Why should we try and pick a bottom here? We also have a cluster, 3 sell signals, and nothing really has happened yet. This is a sign that there may be a strong move to the downside. And look at the nice move, 35 points in the next month coming into September. Once again, if you miss that, you have a strong enough trend, the market always gives you second chances to get back in. So there were multiple other chances to get into this as well. Now here's an example in a Wayfair that we talked about in the beginning. And when we said that you potentially could have captured some nice points here, how could you have done that? Well, we're above the 50-period moving average. We closed in the top 25% of its range. The remaining 3 rules of the strategy were met of the pattern recognition and 27 points in 1 month. Now, we're not saying you would have made 27 points, but we give you different exit levels. You could have made 1 point and said, thank you, I'm out. Or you could have made 5 or 10, or maybe tried to stay in longer. It's up to you. As I keep reiterating, you are in charge of your own trading. This is the only way, in my opinion, that I've learned in 4 decades how one becomes a consistent trader. Not by listening to outside sources, but by learning how to listen to the market and then by making your own decisions. Here's an example here in Tesla. Now, we see here that Tesla in August crossed below the 50-period moving average, where someone would have said, well, boy, Steve, the oscillators are all oversold. look at this reversal pattern right here. You got to buy this. This is a tremendous buy. It's probably going to come back up here and really challenge those old highs. So I'm a buyer of this thing, okay? Once again, 99.9% of all traders trade this way, trying to pick bottoms and tops. There's no consistency in that. Sure, every once in a while you will get a winner, just like every once in a while the slot machines, you will get a winner because they're designed that way to give you this false sense of security that you're doing well. But over time, if you stay at a slot machine long enough, you're going to see that you haven't made anything, that you actually lost money. It's the same way with trying to pick tops and bottoms. You may get a winner here and there and give you this false sense of security that you're on track, that you're trading well. But over time, you're really going to most likely lose money. That's been my experience. It's a lot easier, and you're going to sleep a lot better at night if you simply learn how to trade in sync with what the market wants to do. So what's the market telling us in terms of the overall trend? It's telling us the overall trend is down now. So if it's down, you should only have a seller's bias. You should never be thinking about buying anything. And guess what? We have a bar here that is below the 50 and closes in the bottom 25% of its range. And at the same time, it meets all of the rules of the strategy. So you had 60 points to the downside in 10 days, okay? Did we have any idea that there was some news, negative news about Tesla coming out that would cause that to go down? No, we don't require anyone to listen to news. It's not in any of our strategies. But if you want to, you can. But why should you when everything you need to know is in the chart in front of you? Now, lastly, here's an example, once again, of how most traders deal and compensate with a market that they've missed. I've learned in one thing that traders love to play the victim role. I mean, think of it. How many traders do you hear on a consistent basis always saying, gosh, I got killed today, or boy, that news really wiped me out, or gosh, I missed that one. I was thinking about it, but who knows? I mean, how do we know that it was going to take off? Okay. Traders love to play that game where they weren't told, they didn't have the right information, there was technical issues that made them lose. Because I've learned the reason why traders love to do that is because it always gives them an out. They can always blame something, and it was them or the outside thing that caused them to lose money, okay? That's the easy way out. It always gives you an out, but it causes you to not take responsibility because remember, you should be in charge of your trading. Once you learn how to be in charge of your trading, not only will you not be a victim and have that attitude anymore, but at the same time, you'll be more consistent. Now, how do you get rid of that victim attitude? By learning how to listen to the market. Now, no one knew Amazon was going to go up like this or become $1 trillion company. No one knew that when we were looking at this in May, but we did know that the market told us it wanted to go higher. Now, how did we know that? Because it was above the 50 period moving average. We knew well in advance, way back here, we had consecutive closes above, that the market, not some earnings report, not some guy in a chat room, but the market, the source of everything we're trading was telling us, I want to go higher, okay? For right now, until I change, the overall trend is up. So half the battle was eliminated. You knew that you should be looking for buy setups in Amazon, whether that was, buying calls, whether it's some option spread strategy, whether it's buying an odd lot for your IRA account, it makes no difference. But you knew if someone would have asked you, well, boy, is it time to short Amazon? You said, no, market's telling you it wants to go higher, okay? Now, if you had strategy number 4, you could apply these 2 rules, which I taught you today, and look at all the buy setups you could have taken advantage of using these particular rules, okay? So there's no reason to play that victim role once you finally take responsibility for your trading. The reason why most traders listen to outside sources, buy some $10,000 system or take some $20,000 class or listen to news or guys on TV is because it gives you an out when it doesn't work. You always have something to blame. But once you really take charge of your own trading, you don't have anyone to blame, and you won't have to spend exuberant amounts of money because you're in charge of your trading. You're making your own decisions. By the way, Amazon went up nearly 500 points in those 3 months. Don't you think you would have liked to have taken advantage of that, some of those 450 points? Sure, you could have taken 1 point if you wanted to. All right, so let's recap before we go to question and answer. Remember, edge number 1. If there's only one thing you learned today, this would be it, okay? Please apply a 50-period moving average to any chart you're looking at. I don't care if you say, well, Steve, I only trade 5-minute bars. Great, apply a 50-period moving average. That's based on 50 of those 5-minute bars. Not that's based on the weekly or the daily bars. We don't care about that. You can if you want to, but it's not required. All you want is a 50-period moving average of the time frame and the chart you're looking at. And then ask yourself, where is price in relation? If you are a buyer, if you like whatever you're looking at and you say, boy, I've got to buy this. This is a screaming buy. Make sure it's above the 50-period moving average. The odds will be in your favor. You will be swimming with the current at your back if you're in sync with the overall trend, okay? Remember, as I said earlier, go back and look at your last 10 or 20 trades. I can almost guarantee you that you had losses because you were out of sync with this simple rule here. And edge number 2, once you know what side of the fence to be on, once you know what bias you should have, apply a little structure in the form of the top bottom 25% bars. Meaning that whatever your strategy is based on, I don't care. It doesn't have to be one of my strategies. It can be anything. I don't care if it's based off the full moon or tides of the ocean. It makes absolutely no difference. But when all the rules come to play, when all the requirements are met, make sure that you first wait for a bar that closes in the direction you want to be trading. Remember that analogy I gave you about the train leaving the train station? Don't get on board a train that's going in the opposite direction, all right? Because most likely it's going to keep going that way. Get on board a train that's leaving in your direction. So wait, if you're going long, wait for a bar to close in the top 25%. That's the market telling you it wants to go higher. If you're going short, just do the opposite, a bar in the bottom 25%. These are two extremely simple rules that you can start applying right now. You can build a strategy based off them. And we showed you how powerful they are because they make up one of our most consistent strategies today. Something I've been trading for 40 years. That's strategy number 4. Remember, here are the highlights. Just one last look at this for everyone. So I don't want you to think that this is something that's so advanced. So Steve, I've only been trading for a short time. Or if you've been trading 20 years and say, well, Steve, you know, I manage hundreds of thousands of dollars here. This is just too simple. It makes no difference. If you want to be consistent, you don't care about those things. It only uses one indicator because it's pattern devised and it works in any market, any time frame, any direction. Okay, so as we close out, I'd like to end by asking you a question and ask yourself honestly, do you think these edges could have helped your trading this past year? All right, we're into the final stretch of 2018. Are you anywhere near where you thought you'd be in January? Most likely you're not. Everyone starts out at the beginning of the year with all these hopes and dreams of where they want to finish the year, maybe making that separate income for that addition they wanted to put onto their house, or perhaps that dream vacation they wanted, or perhaps even wanted to retire, having this income to rely on. Are you anywhere near that goal? Most likely you're not, because this is the way most traders trade. You're basing your decisions off what someone or something else is telling you, and usually that is inconsistent, it's faulty. How would you like to be in charge of your own trading for the very first time? Well, we have a great attendee special for all of the people attending today in the Online Traders Summit. We're going to be offering you a great discount in our strategy number 4. Okay, you're going to get instant course access, detailed instruction. This comes with 15 video course lessons. You're going to learn all the different variables for entries, all the different variables for exits, and all the different variables for stops. You're going to get the automatic buy and sell setup bar arrows, and this includes the add-ons for the Metastock platform. So you get all the add-ons and be able to see when setups are generated. And included with this will come mentoring correspondence with yours truly. You'll get my personal email address. You can contact me whenever you'd like, any questions concerning strategy 4 or anything else concerning trading. And remember, this can be applied to virtually all markets and time frames. Now, this course usually sells for $695, and that in itself, I think, is extremely inexpensive, okay? But we're not gonna charge you $695, and we're gonna discount it tremendously today. Not by 30 or 40%, we're actually gonna discount it 50%. So for one day only, you can buy the full course, Strategy 4, with the Metastock add-on. Everything's telling you where the buy and sell setups are, but with the online course as well, so you absolutely know what you're basing your decisions and buy and sells are based on. For only $347.50. But remember, this offer is good for one day only, Saturday, today only. Because of our association with the Online Traders Summit, we're really dropping the price down to half price. So here's how to take advantage of this. You can, if you'd like, contact my sister site, which is Pro Trader Strategies. I developed the strategy add-ons for them, for Metastock with them, and you can call them directly at area code 310-598-6677. Now that link is the link that will take you to the 50% sign-up page. Unfortunately, that's not a live link, so you can just simply copy and paste that, and that will take you on to the 50% sign-up page there, okay? So I don't know if they're going to post that on the chat box, but You can copy that, write it down, or I'm sure Jeff, or they will have it later on in the presentation where you can just go to that link and you'll get the discount. I think I have about 5 or 10 minutes. If not, Jeff, let me know, but I don't want to take anyone's time, but I'll answer some questions right now. I'll go to the question and answer box, and let me just backtrack here so I don't miss anyone.
You're good, Steve, and I'm pasting that link for you right
Oh,
now.
okay. Great, thank you, Jeff. Yeah, Jeff's going to have the link, I believe, in the chat box, so you can see that and automatically see that there. Let's see, Jay asks, can I use or learn strategy 4 and use it without Metastock? Sure you can, but I mean, with Metastock, it's automatically right there, and plus you can use the scanning with it, and it's just, you know, you're going to get the setups right away, and I believe you'll get a great, if you don't have Metastock, Jeff has some great offers to get it or for a trial run, so I would suggest, you know, it makes it a lot easier with everything right there and with the scanning availability. Let's see, Robert says, if the market is going up, but it has not crossed the 50-period moving average yet on the upside, will you still sell or will you buy? Well, remember, just because price is either above or below the 50 does not mean you are buying and selling at the market. You still have to apply structure. So if I get a sell signal, even though the market's going up, and I get and I don't have a sell signal, I'm not simply going to sell. I have to wait for structure to appear in the form of strategy number 4. In other words, imagine once again that analogy of a river. Okay, we see a very strong current to the upside. All right, but we still need a boat in order for us to take that current on that river. We can't just jump in because, you know, we might even drown because it may be too strong. We need some structure in the form of a boat or the form of an inner tube or a raft. That's what a strategy is. You can't just jump in and say, well, Steve says it's below the 50, so I guess I should just sell, right? No, it's like jumping into the water and hoping you're going to be able to swim. You need some structure in the form of a strategy. That's what strategy number 4 does, okay? How much money should you start to trade to make money? Well, I'm not a stockbroker, and that's something you should actually use with your or ask with your broker or someone that is involved in finance. We are an educational company. That's our only purpose. So once you learn how to do this, even if you have $10, you can still learn how to do this and save for an amount of trading that you feel is adequate for you. We're not here to tell anyone how much money they should have. We're simply here to educate you. As I stated in the opening statement, we're only an educational company. That's all we do, is we supply education that has stood the test of time, okay? Steve, it's easy to see after the, let me see what I see here. I just want to make sure I'm getting the correct questions for me and not, they were not Steve Bigelow's, and I'll answer them quiet. Steve, it's easy to see after the fact. Looking at the complete chart is easy. You have to show candle by candle to show or a buy or sell signal. I don't know if this was meant for me or for Steve Bigelow, but because we're both named Steve. But first of all, after the fact, you know, when you see a buy or sell signal, it was automatically generated there. In other words, these are not look forward or look back type of execution. So those would have been generated at that point. So we're just showing you things that happened within the last month, and those are actual signals. Now, going forward, sure, there are some losses, and I showed you a loss there where it didn't work out well. But looking back after the fact, it's easy to look back after the fact, but with the 50-period moving average, as you saw there, the 50-period moving average had you on the buy side or sell side well in advance. So there's no really looking after the fact once you see the 50-period moving average, okay? If I understand your question. Let's see, AJ is asking about stop loss. That's a great question, AJ, but remember, that's part of the course. I just gave you 2 of the rules. The stop loss is another one of those rules, but I can't, you know, it wouldn't be fair to the people that actually paid close to $700 if I gave you all of the rules for free. I mean, that would be like going into a restaurant and me giving you a couple of free appetizers, and then you said, can I have my meal, my entree for free as well? I can't do that, you know, but I'm giving you 2 great edges here that you can start using. And you know what, do your due diligence. Go and explore for yourself today. While you know, you're listening to me right now, you could go on a chart right now, look at the 50-period moving average and say, wow, you know, this kind of does work in terms of the overall trend. And look at bars that close in the top or bottom 25%. And I'm sure you'll see that, boy, there is a lot of consistency there. Now all you need to do is apply the other rules in the form of this pattern, and you'll be able to really trade strategy number 4, okay? So I'm sorry, I can't give you the stop loss. It just wouldn't be fair. when people say, okay, 25% close, okay, people are asking about the 25% bar. The easiest way to do it, and remember, the 25% top bottom bars are automatically calculated on the add-on. So your setup will be there, but we want to teach you what you're looking for. Remember, we're not a systematic company where we just say, don't worry, just go to Metastock and just when there's an up arrow, just buy. When there's a sell arrow, just sell. We don't believe in that. We want you to know what you're looking at. So a setup bar, when all the rules come into play, the last bar that meets the requirements will be your setup bar. Now, if you have a buy signal, it's going to be above the 50. And that setup bar is going to close in the top 25% of its range. That means if you take that bar, or any bar, doesn't matter if it's a tick chart, a 5-minute bar, or a monthly bar, just divide the range from top to bottom by 4, okay? 4 separate but equal parts. If you close in the top quarter, that's a valid setup bar. Why? Because the market is telling you it wants to go higher. Now, if you're selling, well, you need to be below the 50 period. Now, if all the rules of the strategy come into play, you want to wait for a bar that closes in the bottom 25%. So you take the bar, you measure from top to bottom, divide by 4 separate but equal parts. If you close in that bottom 25%, that's a tremendous edge. That's a clue. That's coming from the market telling you that most likely it wants to go lower. So these are tremendous edges, and explore them right now. You don't have to spend any money. You don't have to spend $347. You can go see them right now on your charts. Go to Metastock, open up any chart, any time frame, any direction, and you'll see the simplicity and the power behind these 2 edges. Now, when you add a few more rules, that's where you get strategy number 4, okay? I think I'm just about out of time. I don't want to take any more time. I want to thank Jeff Gibby and the Online Trader Summit for inviting us to speak today. I hope you learned something. We always try to leave you with a little information and education, so I hope with these 2 edges, you got some trading education today that you can start applying to your own trading. But most importantly, I look forward to all of you becoming students of mine in the strategy number 4 course. So Jeff, I'll give it back to you, and I want to wish you a great day, and stay tuned for some great speakers.
Thank you, Steve. Great job today too. I see all the comments coming in about how they enjoyed the class and all that kind of stuff. Really appreciate you spending some time with us at the Online Trading Summit today, and thanks for coming.
You're welcome, Jeff. Thank you.
All right, very good. We're going to go ahead and move right on to the next person. I hope you guys enjoyed that. Again, there's so much good information from these guys today, and I hope you're enjoying the summit in any case. I do want to talk a little bit about the Trader's Toolbox and how that works. As you know, our first speaker today is Steve Bigelow, or was Steve Bigelow. He did the candle profit system. Coming right up, Joe Duffy is going to talk about a COOP system. Later on today, we're going to have Adrian Mance and Robert Dedman talk about their add-ons. Those are all add-ons that you pay for on a one-time basis with Metastock. They all come with 30-day money-back guarantees, and they're all basically, if you purchase them all separately from us, they would cost $1,896. If you buy them here today at the summit, we're actually going to give them to you for $1,596. But we're also going to throw in 2 years of technical analysis. We're going to throw in 2 years of Metastock, our real-time version. We're going to throw in 3 months of access to our Metastock Zenith program. Metastock Zenith's an incredible tool. I'm going to show you just a few things in it later today. But it's to give you an idea of what that tool is, it's a product that they designed. Thomson Reuters built it as a competitor to Bloomberg. If you're familiar with Bloomberg, you know it costs about $2,100 a month to have it. Thomson Reuters, when they developed Metastock Zenith, they spent over $1 billion designing it. They have their huge organization of news reporters, over 3,000 full-time journalists and 300 different news bureaus reporting information into it. It is by far, in my opinion, the best news and data service that's available on the planet. You can get data from over 200 different exchanges, has the best news available that you're going to find, short of maybe a Bloomberg terminal. They charge a lot more for it when they're selling it to banks and institutions. We sell it for about $150, but we're going to throw that in there for you as well. I'm going to do a boot camp next week, October 4th at 6 p.m. Eastern, to show you how to get Metastock running. I'm going to have one of our support reps actually sit down with you and help you get everything installed. Make sure they answer any questions that you have. They do a really good job. It's a one-on-one session with one of our Utah-based support reps, where the whole goal is just to make sure you're up and running, okay? And we'll also include a Metastock course. So if you've never heard about Metastock, this is a great way to go ahead and get started with it. It includes 4 of our best add-ons that we've got, 2 years of stocks and commodities, and 3 months access to our premium product. And all of that's available normally. If you just bought all that separately, you'd pay $2,696 for it. $2,596, I think I said that wrong. But at the Summit Special today, what we're gonna do is we're gonna make that available for you for $1,596. If you have questions on this, give us a call at 800-882-3040, or you can chat online with our guys. We've got a couple guys here to answer any questions you've got at metastock.com/saleschat. Okay. The other thing that I will mention about Metastock, it's actually been rated #1 in its price category in technical analysis of stocks and commodities Reader's Choice Awards 25 years in a row, including this last year. And so just to do the math on that, that's every year it's been rated #1 since 1993. It'll do a lot of things. It helps you scan. It has one of the best system testers available out there. It has a forecaster that helps you forecast probable price movements. There's a reason it's been rated #1. And again, this is a great way to give it a try as part of this toolbox. Give us a call at 800-882-3040. We'll answer any questions that you've got. And you can also chat online with us at metastock.com/saleschat. Okay. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. They did a great job. They've been sponsoring them for years now. And as I just told you, for anybody that buys anything today, they're going to give a 2-year subscription for anybody that buys that Trader's Action Pack. But in addition to that, you have a free copy. Here's the link. I've been promising it, and I just keep forgetting to send it. If you didn't claim your bonus offer for stocks and commodities before, here's the link to do that. I just sent it through the chat. And just double checking to make sure I am sharing the right option. And let's go ahead and talk a little bit.